Okay, let's just dive right in. I mean, picture this. A company whose shares have just exploded. We're talking over 1,400% in the last 5 years alone.
Yeah.
Now, put that next to the S&P 500, the wider market, right?
Mm-hmm.
That grew, what, maybe 93% in the same time?
Still good, but yeah, nowhere new.
Exactly. So you just have to ask, don't you, what on earth could possibly fuel that kind of, well, meteoric rise?
It really is an absolutely stunning story, and the scale of it is just mind-boggling when you look closer.
How so?
Well, back in 2020, Nvidia wasn't small, right? They had a market cap around $225 billion. Annual revenue, maybe $13 billion. Solid numbers.
And respectively.
But fast forward to now, we're looking at a market cap over $3.4 trillion.
Wow.
And annual revenue, nearly $150 billion. I mean, that kind of growth pushes it right into the very top tier of American companies. Is huge.
Truly incredible number.
Yeah.
So, okay, our mission for this deep dive is pretty clear then. We need to unpack what drove NVIDIA's, frankly, astonishing last 5 years.
Mm-hmm.
And maybe even more important, try to figure out what the next 5 years might look like.
Yeah.
Especially, with this whole AI revolution just picking up speed.
Right.
And just so everyone knows, what we're talking about today, it's all based on a recent analysis that really digs into NVIDIA's future outlook.
And if you want to connect the dots here, the absolute core driver behind this whole thing, it's the unbelievable growth in the market for AI chips.
Yeah.
NVIDIA, they design these things called graphics processing units, GPUs. You hear about them all the time now. They provide the raw computing power you need to train and run these massive large language models, LLMs.
Brains behind things like ChatGPT, right?
Exactly. So they're GPUs like the H100, the H200, and this new Blackwell series they've announced.
Right.
They've basically become the backbone, the foundation of this whole AI chip market, an empire almost.
Right at the heart of it.
Yeah.
So our job today really is to pull out the key insights from the analysis we looked at.
Yeah.
Help you understand not just, what happened, but what it actually means.
Yeah, the implications.
For the future of AI, for other companies trying to compete in this space. And the big question, I guess, the one we're trying to answer for you is, are we looking at another massive rally for NVIDIA? Or is something else coming down the line?
That's the trillion-dollar question, isn't it?
So let's start with the how.
Yeah.
How did NVIDIA actually get so dominant so fast in this really crucial AI chip market? It surely wasn't just about having, good hardware.
Oh, absolutely not. I mean, the chips are powerful, yes. Very powerful. But the secret sauce, you might say, was their early bet on something called CDA.
CDA.
It's their software platform. Basically, it lets developers use NVIDIA GPUs for all sorts of parallel computing tasks, not just graphics. Think of it like the operating system and the toolbox for their chips.
Okay.
And the crucial part, they started building this, investing in it, well over a decade ago, way before this whole AI thing really exploded.
So they were ahead of the curve.
Way ahead. So when AI researchers and developers needed serious power to train these complex models, where did they turn? They went to NVIDIA, because that's where the best software tools, the libraries, the frameworks, that's where it all was. And frankly, it still mostly is.
So it's not just the chip itself, it's the whole developer environment around it. That created a kind of lock-in.
Exactly.
A bit like, say, Apple's iOS or Google's Android for phones.
Yeah.
This is for AI development.
That's a perfect analogy. Yes, it created this huge barrier for anyone trying to compete.
Right.
I mean, even if another company, say AMD or Intel, designed a chip that was, on paper, just as fast, they'd still have the massive task of convincing developers all over the world to ditch the tools they know, rewrite their code, and jump onto a completely new, maybe unproven software system. It's a monumental hurdle.
Yeah, that sounds incredibly difficult.
And you also can't forget their manufacturing side. They built really strong relationships, especially with TSMC, the big chip fabricator.
Okay.
That meant when demand for AI chips suddenly went through the roof, NVIDIA could actually scale up production to meet it. So you have this combination: great hardware, dominant software, and solid manufacturing. It just created this flywheel effect.
And that makes a lot of sense. They built the road, they optimized the cars, and suddenly everyone wanted to drive on their highway.
A good way to put it.
Okay, so that's the past 5 years, roughly. Now, looking ahead, the analysis we read suggests things are shifting. The next 5 years probably won't just be a repeat performance, will they?
No, almost certainly not.
What are the biggest challenges, the biggest headwinds NVIDIA is facing now? Especially, I guess, competition.
Right, that's really the core tension, isn't it? On one hand, the overall market for AI chips, it's still expected to grow incredibly fast. That's obviously a huge plus for Nvidia.
A rising tide lifts all boats, potentially.
Potentially, yes. But on the other hand, the competition is definitely noticeably ramping up, and it's coming from sort of two main directions.
Okay, what are they?
First, you've got the, let's call them traditional rivals. Companies like AMD and Intel,
Right.
they are pouring money into developing their own AI-focused chips and, crucially, their own software platforms to compete with CUD. So AMD has its Instinct chips and ROCm software. Intel has its Gaudi accelerators.
And are they actually making a dent in NVIDIA's lead? Is it working?
It's still very challenging for them. I mean, some chips, like AMD's MI300X, look pretty competitive on certain tasks based on benchmarks.
Okay.
And they are definitely working hard on the software side. But realistically, they're still playing catch-up. NVIDIA has that decade-plus head start with CUD, with the developers, with all the optimization. It's hard to overcome quickly.
Okay, so that's one front. What's the second type of competitor? You hear a lot about the big tech companies themselves building chips.
Exactly. And this might actually be the more significant threat, at least in the longer term, especially to NVIDIA's profit margins.
What is that?
We're talking about the hyperscalers. Think Google, Amazon, Microsoft, Meta, even Apple. These companies are NVIDIA's biggest customers.
Right, they buy tons of GPUs.
Tons. And now they're all investing heavily in designing their own custom AI chips. Why? Well, partly to reduce their dependence on NVIDIA, partly to tailor the chips perfectly for their specific needs, like running their search engines or social media feeds, and ultimately to control their costs.
So like Amazon's Trainium and Inferentia chips or Google's TPUs, these aren't just side projects then?
Oh, no, not at all. These are major strategic initiatives. Google's been using its tensor processing units, TPUs, for its own AI stuff for years now, and they keep improving them. Look, when a supplier like NVIDIA has a gross margin hovering around, what is it now, an incredible 70%?
Yeah, 70.11%, the analysis said. That's huge.
It's massive. So it's only natural that your biggest customers start thinking, maybe we can do some of this ourselves and save some money, or get better performance for our specific tasks. This push could definitely put pressure on NVIDIA's pricing power, and therefore its margins, down the road, even if overall demand for AI chips stays sky high.
That's a really interesting dynamic. So they're getting squeezed, potentially, from both sides. Traditional competitors trying to catch up and their biggest customers trying to sort of cut them out by building their own stuff.
It's a good summary, yeah.
It really does underline the uncertainty about the future, doesn't it? I mean, I saw in the notes, analyst predictions for NVIDIA's revenue in 2030, they range from $281 billion all the way up to $600 billion.
It's a massive range.
That's a huge difference. What explains that gap?
It really just highlights how unpredictable this field is. It's moving so fast. The lower end of that forecast, the $281 billion, that assumes basically that competition really heats up, eats into NVIDIA's market share, and forces down those high margins. The higher end, the $600 billion, that scenario assumes the overall AI market continues its explosive growth, and that growth is so big it kind of outweighs the impact of more competition. Or maybe the competitors just don't catch up as fast on the software side.
Right.
It really hinges on how successful these rivals and these hyperscalers are at building not just good chips, but the whole ecosystem around them. That software piece, the CDA advantage NVIDIA has, it's really hard to replicate quickly.
So, okay, let's try and bring this together a bit. We've talked about this core tension. We've got NVIDIA's incredible success over the past few years, mostly driven by just dominating the AI chip market.
Unquestionably.
But then you contrast that with all these uncertainties, this rising competition we expect over the next 5 years.
Yeah.
And it's worth remembering, like you said, this whole area, GPU data centers, AI infrastructure, it's still really new, really cutting edge. Making solid long-term predictions is, well, it's tough.
It is tough. And it really boils down to those two opposing forces, doesn't it? On one side, you have the potential for the whole AI chip market to just keep growing at a blistering pace. Could that growth be enough to keep NVIDIA flying high, even with more players jumping in?
That's one possibility.
Or, on the other side, do we see those amazing profit margins start to shrink? As AMD and Intel get more competitive, and as the big tech giants Apple, Google, Amazon, Microsoft, Meta get better and better at making their own chips, that huge spread in the 2030 revenue forecasts, $281 billion to $600 billion, It really captures that fundamental uncertainty.
It certainly does. And, it makes the investment picture quite nuanced for you, the listener. The analysis we looked at suggests that Nvidia is probably still a solid long-term bet,
Yeah.
likely to, match or maybe slightly beat the S&P 500.
Yeah, still a strong company.
But interestingly, the source also pointed out that the Motley Fool Stock Advisor service, in their latest list of 10 best stocks to buy now, well, Nvidia wasn't on it, which might suggest maybe that they think the opportunities for those monster returns like the 1,400% we saw might lie somewhere else now. Perhaps not with the established giant.
And that brings up a really interesting thought for you to consider moving forward. We mentioned that 70% gross margin Nvidia enjoys. It's remarkable.
Yeah.
But with all the big tech players now developing their own chips, how is that going to force a company like Nvidia to react? Will they have to innovate beyond just making faster GPUs? What else could they offer?
Good question. New software? Services?
Maybe. And on the flip side, as you get more companies making AI chips, AMD, Intel, Google, Amazon, what new opportunities does that create for developers, for businesses? Does it make AI more accessible, maybe? Does it spark different kinds of innovation?
Lots to think about there. So I guess the final question for you is this. As this AI revolution keeps unfolding, what will you be watching for in the market next?